Hello everyone, this is Monya. Welcome back to another video. So today I'm looking at a very good strategy for the boom and crash, both the 500 and the 1000. So I've been doing some analysis on this, and I've realized you can make consistent profits using this strategy. So this is a 50 pip strategy. You get your 50 pips, you get out of the market, and it's very simple to follow. So let's get right into it. Okay, so the first thing that you need to do is you need to remember that the trend is your friend, right? So you're gonna open your boom or your crash. Let's start with boom. You're gonna open your boom 500 or boom 1000. Right here I'm opening the boom 1000. And what you're gonna do is first you're gonna determine the trend. So you're gonna do a trend analysis, and you're gonna say you have to know, are we in a downtrend or we're in an uptrend. So with this strategy, you look at your boom and you want it to be in a downtrend, like here. So anywhere from here to here, you know we are in a downtrend, right? So this strategy applies. So for your boom, it has to be in a downtrend. So you notice that the strategy is in a down. The boom 1000 is in a downtrend. Then what you do? You go back to your 1 minute time frame. So to determine your trend, you can either use your 50-minute time frame, or your 1 hour time frame, or your 4 hour time frame, whatever you use to determine, or your 5 minute time frame, which is the one that I use to determine my trend line. So you notice that the boom is in a downtrend, which is the first condition, and then you go to a 1 minute time frame. So what you do is, once you are in your 1 minute time frame, you are now looking to enter just after a spike. So you wait for a spike to happen, and then you enter just after the wick here is formed, the tail or the wick. Some call it the wick, some call it the tail, which is this part from the spike. Once the wick is formed, you enter into a sell. So remember, this is a scalping for the boom. You're not trading the spike, but you're scalping the bearish candlesticks. Once this wick is formed, you enter immediately. Once you've done that, you wait for this candlestick to form. Don't enter after it is formed. Go down with it. Okay, you enter on this candlestick. So each bearish candlestick, which is the black one, represents 50 pips or something close to that. So with this strategy, you're only aiming to get those 50 pips. So yeah, some might say that's very little, but with the proper money management skills, you'll realize that's a lot of money. So you enter into this, you get your 50 pips, you close the trade. Simple as that. You enter, you close. After 50 pips, you close. Don't be greedy. Don't wait for it to keep falling. No. You use other strategies to do that. With this strategy, you wait for the wick to form. Once it's formed, you enter into the sell, you collect your 50 pips, you close. As simple as that. As you can see, so let me just give you a mathematical analysis of how much you'll be gaining or how you should be trading it. So if you have an account with let's say I'll start with $1,000. If you have an account with $1,000, you put your lot size 25, put the lot size as 25. So the profit from that one bearish candlestick will be $10, right? From the 50 pip fall. And then you do this 10 times a day, and then you get your $100. As simple as that. This has the lowest risk ever possible. Why am I saying that? Because remember up there we said make sure you're in a downtrend. So you are in a downtrend. So if this strategy fails, of which it rarely does, let's say on this scenario where it failed, you can still hold on. Even if this after the wick is formed and then another spike comes, you can still hold on because you are in a downtrend. So you wait for the retracement, you wait for it to fall down. It was just a retracement, so you wait for it to fall down. So this strategy is the minimum risk possible because you will be in a downtrend. So if you get spiked twice, it means you just have to hold your position and you wait for it to fall down because you are in a downtrend. So it's gonna keep falling. That's the reason why you first have to determine that the boom is in a downtrend, which is an important key. So I was talking about the account capital and the lot size you'll be using. So if you have a $1,000 account, you place your 25 lot size, you get your $10, you jump out, you do it 10 times a day. In less than 3 hours, I think you'll get 10 entries on this boom in less than 3 hours, and then you get your $100, you close. This is a simple strategy for those who want to constantly grow their profits. I don't want to talk to people that are money hungry or that want to get rich quick. No, these are people that are ready to make money over time. So you get your $100, you jump out. So for those with accounts from $500 to $900, all you have to do is you place your 17 lot size. For each bearish candlestick, you get a profit of $8, and you do this 10 times in 3 hours, you get your $80. You wait, already you now qualify. If you had a $900 account, you already qualify to start using the 25 lot size. So you keep growing, as you see that, as you can see. So if you have a $2,000 account, you just double it, which is 25, which is a 50 lot size. And so if you have an account with $400 to $499, the lot size that you should use is $10, is 10 lot size. And the profit target profit on the 50 pips is $5. So you get your $5, you jump out, you repeat the process 10 times, you get your $50, and it's a good day for you. And if you have an account with $300 to $399, the lot size that you should use it's 8, and your target profit will be $4 from the 50 pip fall on that candlestick. And then you do it 10 times, you get your $40 a day. And if you have an account with $200 to $299, your lot size will be 5, and your target profit will be $2.50 times 10, which is times 10 trades you will take, which is $25. So as simple as that. So let me count the number of times this strategy has worked. Okay, let's say today is January, right? Let's say you start trading at 5 a.m., right? Or at 6, let's say 6. So here at 6:42, you got a nice entry, you get your 50 pips, you close. First trade, it worked. Second trade at 7:08, it worked. Third trade, it worked. Now you are at 150 pips. fourth trade, it did not work, but because you are in a downtrend, you keep holding it. You don't close in a loss. You keep holding your trade and wait for it to retrace and you close. Another trade there, another trade there, and another trade there. So as you can see, the strategy works perfectly fine if you are patient and ready to make consistent profits. Okay, let's look at boom 500. Let's see if it follows the same thing. Like I said, the first thing, you determine the trend. You go to 5-minute time frame and you see where it was in a downtrend. Right now it's in an uptrend, so you can't do anything, because I use my 5-minute to determine my trend. I can go to the 50-minute time frame. I can see the same thing. It's not going in an uptrend. Even if you draw trend lines, you can see that I don't know what's happening. Okay. Okay, the other way you can do it is by drawing a trend line, maybe in your I don't know what's happening with my phone. In your 1 hour time frame, or okay, yeah. So you can draw your trend line. I don't know what's happening with my phone, like this. Already you can tell that it's in an uptrend. I don't know what's happening with my phone. I'm missing something like this. Already you know you're in an uptrend. Okay, so you can't enter. So you wait until you have a perfect condition. So let's go to the crash. I'm opening crash 500. So the first condition is the opposite for boom. For crash, you have to be in an uptrend. So I'm in my 50-minute time frame. I can see we're in an uptrend right now. Okay, someone might ask, why do you want to be in an uptrend? The reason is, if the strategy fails, isn't it? If the strategy fails, you can wait for the retracement to happen. Okay? So that's why you have to make sure that you are in an uptrend for crash and you are in a downtrend for boom. So right now I'm in an uptrend. Okay, I'm on zoomed out. I'm in an uptrend for crash. So I go back to my 1-minute time frame and I trade. We just missed this right now. What I was supposed to do is I wait for this crash, for this spike to happen and this wick to be formed, and then immediately I enter into a buy. I collect my 50 pips from here to here and then I close. So when the spike happens, you wait for like 5 seconds for the wick to form. You enter into a buy on crash and you collect your 50 pips and you exit. So with crash, this strategy has been faithful except here. But as you can see, it's still retraced up back up to your position, which means that's the benefit of you entering when it is in an uptrend, so that when you get these two spikes, you wait for it to retrace up here. So one other important thing is for you to be using proper risk management. That's why I gave you the lot sizes that you should be using. so that you can hold once there is a double spike like that, and so that you don't miss. And one other tip that I wanted to give you guys on this is the best time to be trading these indices is between 7 a.m. to about 11 a.m. Central African time. I think it's about 8 a.m. It's 5 a.m. GMT to like 8 a.m. GMT. So those are the perfect times to be trading because there's less manipulation in the market. So if you like these videos and if you want me to keep sharing these strategies, please click the subscribe button and turn on your notification so that you know when I post a video, and also click the like button so that I know you like the stuff that I'm posting, so that I can keep posting them. And also, if you have anything that you want me to help you, or if you want me to do a video on, just leave a comment in the comment section. I'll read about it, and if I can help, I will. So like this video, share, subscribe, and meet you next time.